The market had a huge rally, hitting an all-time high until late last month. That is when the president's tariff talk got tougher. Since then, the Dow has dropped more than 6%, wiping trillions of dollars off the market. Now it's about right where it was 4 months ago. And then if you zoom out and take a look at the market over the past 10 years, there's been tremendous growth over the past decade, up more than 130% since the start of 2015. And according to some, the market has been running a bit too hot and that some cool down is needed. Joining us now, Mitch Roschelle, financial analyst and principal of Madison Ventures Plus. Welcome back. You know, when you look at your 401k as a whole, I know that we often hear don't panic, right? Let it kind of run its course. But what about people right now who are drawing upon it, who see the numbers fluctuate and are really feeling that pinch? What's your advice first to them?
I would hope that somebody that's a retiree and is actually pulling money out of their 401k as their retirement benefit from a career of work isn't overly invested in the stock market. In fact, the older you get, the less invested you should be in stocks that tend to be more volatile, and you have to find ways to get income in retirement that is less risky. But if you're younger and you're looking at your 401k balance and you're not going to touch it for 40 years, definitely don't panic.
As we look at the markets open down on this Tuesday morning, anything you notice at the opening bell that can kind of indicate how this day is going to go, or tough to predict?
It's tough to predict. When you're going up slowly on a roller coaster, you're anticipating what the drop is going to be like. That's what the last several weeks have been like. But I often say that the market takes the stairs up, but takes the elevator down. And I'm really glad you showed that chart at the beginning with the 10-year return, because I think what most people looking at these headlines or just looking at that ticker feel is what's going on now. But if you think about the stock market as a wealth creator over time, it's been pretty phenomenal. In fact, the 10-year period that you indicated starting in 2015 included the effects of COVID, and it's still more than doubled in that period. And then if you look at a 20-year period, it did even better. And that included not only the COVID cycle, but the global financial crisis. So I think, the best thing you can do is think about it historically and not think about it in the tick by tick in the moment.
And would you agree then that a cooling off period, a correction may happen or be necessary?
I think so. And it happens quite often, in any year. You'll see, especially when a market's driven by technology stocks, which tend to be big growth vehicles, but also tend to be a little bit more volatile. You see these 10% corrections. It used to be that the companies that drove the stock market, the Dow Jones Industrial Average, were big industrial companies. Now what's been driving the stock market, in the last 25, 30 years has been technology stocks. So they tend to be, rocket ships on the way up and pretty bumpy sometimes on the way down. So I'm not concerned about it, but I can certainly empathize with those who are. And again, as you said it when you introduced me, not a time to panic.
Not a time to panic. You've called the tariff situation a tariff tantrum. I think a lot of us are still trying to wrap our minds around how these tariffs are going to work. And as the White House promises long-term success at the end of some short-term pain, what would you like to hear from the White House to quell fears right now?
I think a consistent message, and the reason why I say tantrum, that's the market's responding with the tantrum because they don't like it. But, the tariffs start on such and such a day, and then the next day there's a message that, we're giving it, 30 days to see what happens. Clearly, there's a lot of negotiating going on in the background, and I appreciate that. But I think the American people feel whipsawed. And what I worry about, and I think the president's meeting with business leaders today, I'm not worried about the stock market. What I am worried about is businesses continuing to invest. And in a service economy like ours, their investment means, creating jobs. So I think it's important for the administration to let business leaders know exactly what they're up to, why, and what the timing looks like, so businesses can plan and continue to invest and grow.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider, and don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.